Hey everybody, welcome to the Wealth Advisory's top stocks to buy for July 2023. That's right, we are about to enter the second half of the year. The first half flew by and it was a pretty exciting one. Markets are up. The NASDAQ entered a bull market, the S&P entered a bull market, the Dow is like just outside of a bull market, but it's probably going to get there. I mean, unless, the second half of the year turns out to be incredibly different from the first, which it obviously could be, nobody knows. But we're going to do our best to make some predictions for at least the coming weeks today. With me, as always, is my partner in crime and investments, Jason Simpkins. Wow, we had a great month last month. I just want to throw that one out there. And I'm going to take a little bit of credit because Albemarle, I feel like that was my pick last month, and that was up like 12 or 13%, which is awesome. I wasn't expecting that kind of gain from it. I was hoping for like 4 or 5. So whenever I get triple what I want,
Sure.
That's a good month. But yeah, even without that one, our stocks averaged a little bit higher than the markets, which were up like, between, I want to say 1 and 2% across the 3 that I just named. You had some great picks. I had some great picks. We both had a couple that didn't do as well as we wanted to. But we're back. We're undaunted. We're going to see if we can beat the markets again this month. Before we get into it, I just want to make sure that I point out that if you're watching this on YouTube, we are going to cut off after we do our first 4 stocks. So that's our 6th through 10th picks. Because this is a video that we put out and a list that we put out for our paying subscribers of the Wealth Advisory. As you can see, the Wealth Advisory, it's an investment newsletter that the two of us co-run. We focus on income investments. We try and invest in long-term trends, and we've done a pretty good job so far. We've beat the market. We've beat most hedge funds over the past few years, and we're going to continue to try and do that. But because people pay for access to the Wealth Advisory, we feel like it's only fair that we give them all of the list while we give you only part of the list for free. But if you want to join us, I highly recommend it. Obviously, I'm a little bit biased, but there's a lot of value in a membership. Honestly, a small investment in Albemarle last month, would have paid for a whole year's worth of the Wealth Advisory. Albemarle was one of the picks that you wouldn't have gotten by watching YouTube, and you would have only gotten by watching the video on our members-only site. So we'll put a link in the description below the video. It includes a discounted offer for the Wealth Advisory. It's basically the cheapest price that we can offer. It sort of just covers the cost of running this because, we do have to pay for office space and Wi-Fi and all of the different things that everybody else has to pay for. But I'd like to proudly point out that it's one of the few things that hasn't been affected by inflation. It costs the same, actually it costs less than it used to, so what other product can claim that? But yeah, so, that all being said, we are going to cut this off after our first 4 picks for those of you watching on YouTube. But if you'd like to join us, we both highly recommend it. We would love to have you as a subscriber, and you can get a discounted offer in the description below. If you choose not to join us, though, we're not going to get mad. We won't hold it against you, and we'll continue to post these videos for as long as you want to watch them. So that all being said, let's get into the July list. And I believe I have the honor of going first. And my first pick, or technically my number 5 pick, is going to be a little bit of a detour from tradition here at the Wealth Advisory, in that it's not a dividend-paying stock. It doesn't have an income stream, but it is riding what I think is a very long-term trend, which is online retail and, another trend that seems to be picking up speed too, which is pet ownership. And the stock is Chewy. The ticker symbol there is CHWY. And Chewy, for those of you who don't know, I don't know how anybody hasn't heard of Chewy, but if you haven't, it's an online pet retailer. They sell dog food, cat food, all of the different foods for all of the different pets that people could possibly have. I mean, if you have a ferret, you could get stuff. I don't know why you would have a ferret, but if you do, you could get stuff for your ferret on Chewy. They also have a prescription business, and the prescription business is something that I think really has like the big potential for growth there. It's a lot easier to order the prescriptions. My dog takes a monthly thing for heartworm and a monthly thing that helps prevent him from getting like tick-borne and flea-borne diseases and helps keep him from getting fleas and bringing those into our house. And it's so much more convenient to just order those from Chewy than to have to, drive all the way into the vet to pick them up. Chewy contacts your vet says, yep, they've got a prescription, send it on out to them. It's really a great company. I use it. I love it. We're investing in it. I'm a shareholder in it too, personally. It's got a lot of momentum behind it. It performed really well last month. It was up 2 or 3 times what the markets were up. And it's still got some momentum behind it in that it's trading above its short-term moving averages, which, the moving average is sort of like an average of the prices over the past X number of days. The 50-day moving average is the average over the past 50 days, 100-day average over the past 100 days, and it's the 100 days before, so it's an average that moves on a daily basis. And right now, Chewy's trading above those. That's a technical indicator that says that it has some momentum and that momentum could continue to carry on through July. So that's why I'm making it my first pick this month. Chewy, ticker symbol CHWY. All right, now let me clear that off and pass this over. Yeah, I'm getting better at that. And I'm going to let my partner here let you know about his first pick.
All right, so the first one I want to talk about today is a defense contractor that often gets kind of lost in the shadows beneath bigger companies like Lockheed Martin or Northrop Grumman, the Big Five, kind of like that. It's called Leidos. That's LDOS, Leidos. The thing about, like I said, Leidos, it's not in the 5. It's not, General Dynamics, Lockheed Martin, Boeing, Raytheon, those companies. It kind of flies a little bit under the radar, but they work on some really interesting things. And one of the things that kind of came out in the past month that they've been developing is a hypersonic test bed that they've been working on for the U.S. military. And that's important because, you've probably heard about hypersonic weapons by now. They go incredibly fast, faster than Mach 5. China has them. Russia has them. We don't really have hypersonic weapons deployed at the moment. We're developing a lot. Funding has really exploded for them in the government, up from a couple $1 million is 5 years ago or so to a couple $1 billion now. So we're talking about a major increase in hypersonic funding. And one of the projects they worked on, like I said, is this test bed. And what that's going to do is accelerate the development of these hypersonic projects. It's also going to help create a experimental glide body to evaluate and validate performance of hypersonic components. So that's an important project. And to give you another idea of the kind of stuff they're working on, another deal they recently signed, sensors for the U.S. Marine Corps. And what's interesting about these radar sensors is that they can't themselves be detected. So they can identify enemy threats without our enemies basically locating the transponders or the beacons that we're using to find them. This is technology that's already being actually deployed. They will tell you but not tell you that they are being used in Ukraine right now. And they're going to field dozens of these systems around the world as they kind of upgrade a lot of our missile detection systems, our early warning systems, small craft warnings, all that kind of stuff. If you remember even a couple months ago when China flew that giant balloon over our country, you probably know like we could use an upgrade in terms of threat detection, and that's exactly what this is that Leidos is working on along with this hypersonic testbed project. It's one of a lot of projects that they've got going on with the military that are, I think, really going to help them in the next few months and years. So I've got Leidos here to start.
I like it. Great stock there. We love that one. I feel like you're definitely right, not in the big 5 at all there. And I feel like when we first added them to the model portfolio, one of the things that I really liked about them was that by contracts, like contract size multiplied by number of contracts, they were like number 7. But I had never really heard of them before.
Yeah.
And I was like, wow, these guys are making a lot of money really quietly.
They also used to make, and I think they still make the basically cylindrical body scanners at the airports.
Yep.
So,
it
goes beyond the military. But that's similar technology in a way. It's more or less radar technology that, that scans people for weapons and stuff like that. They're the company behind those.
Very fascinating. I like it. And it sounds like a good pick and shovel play there on the development of the hypersonic
missile
detection and defense systems. Very cool, very cool. I like it. You know, you see a lot of the coolest advancements are come from military tech. You know.
100%.
Yeah, I mean cell phones, GPS, all of that
The
stuff.
internet itself.
Yeah, the internet itself, right? That was DARPANet before. Yeah, all of the coolest stuff that we've got comes from companies like this, so
Yeah.
I like it. All right, and that brings me to my next pick, which would be number 8 on our list, number 4 for my 5. And it's a company that we've had in the model portfolio for a long time. You know, actually not long after it went public, we added it, and it just had it had dividend grower written all over it. And like I said, we like to focus on income streams here and generating growing income streams. And this one has just shown exactly what can happen when you get in on a good company right before it starts growing that income stream. The stock is Innovative Industrial Properties. The ticker symbol is IIP. An IIPR, basically it's an industrial warehouse real estate investment trust, a REIT, and it owns industrial space that is dedicated to growing medical cannabis, and only medical cannabis. It has not branched out into the recreational world, just the medical world and states that have approved medical cannabis. And when we first invested in this company, it was paying, I want to say 25 cents per quarter or $1 per year. It was trading for around, we'll say $20 a share just to make the math easy for me. So that's what, like about a 4% yield? I want to say a 4% yield. Anyway, it's not like, you know, a super high yield. Right now, it's yielding somewhere between 9 and 11%. I don't have the number right in front of me. But basically what happened is this company just kept adding new clients, and every time it added new clients, because it's a real estate investment trust, it has to share 90% of its pre-tax profits with shareholders, who are us. And so what's happened is that it was paying 25 cents a quarter or $1 a year when we first bought it. It's paying $1.75 a quarter now. You know, so over $6 a year. So basically, you know, our yield on those original shares is something like 20 to 30%. So the stock doesn't even have to move. And those original shares gain 30% every year, which was great last year when everything was falling, because IIPR definitely fell with the market. You know, free money is hard to compete with, and when, you know, you start having to pay more and more money for the money that you're borrowing, you start borrowing less and less money, and that's sort of what happened to the whole stock market last year as everything tightened up and financial conditions tightened. But IIPR is trading at what I consider to be a supreme discount to its true value. It's continued to pay its dividend. It's continuing to grow that dividend. It's continuing to ink new partnerships with new tenants. Its properties, I want to say, are 99% occupied. I could be off, it could be 98%, but still they're almost fully occupied, which is pretty much unheard of, you know, with just about any kind of real estate investment trust. Usually they have a little bit of free space. IIPR really doesn't. You know, its space is in super high demand, so, you know, even when it has a trouble with one of its tenants, if one of the tenants isn't able to pay the rent, IIPR can basically just be like, look, pay the rent or get out, because we got other people that want your stuff. And this is another one that moved a lot last month. It's got the wind, you know, the wind beneath its wings. It's got, you know, the wind at its back. It's got wind in its sails. It's got wind is basically what I'm getting at here. And it's also got some momentum. It's trading above those short-term moving averages. And so, you know, I think that it can continue to gain in July. Also, on a somewhat more personal note, our offices are in the great state of Maryland. And Marylanders, in all of their brilliance, voted to approve recreational cannabis in the elections last November. And since then, the state's been kind of figuring out, well, how do we do this? How do we get, you know, everybody approved? And I want to say almost all, something like 95% of the dispensaries in the state who were approved to sell medical cannabis have applied to sell recreational adult use cannabis and have been approved for it. And on July 1st, basically the state is just expecting to run out of weed. And I got emails from the MMCC, and they were saying, you know, hey, if you need your medicine, make sure you go before July 1st, because, you know, there's probably going to be really long lines. But, you know, in between the lines, they were kind of saying, because we're probably going to run out of it. So, you know, it's a huge industry. It's still a growing industry. It's still really at its infancy. And, you know, you're seeing a lot of consolidation now. Bigger companies buying smaller companies merging with each other to become bigger companies. And IIPR is the company that sort of helps facilitate all that, because you can't take out a loan from the bank. and there's only so many more shares you can sell on the market. So when you really want to grow and you've got cannabis-related real estate, IIPR can come in, buy that real estate, front you some money to help, expand on your operations there, and then, just charges you rent, and then shares that rent with us. I love the stock long term. I think that it's got potential short term, so it's my second pick, our number 8 pick for the month, Innovative Industrial Properties, IIPR.
There you go. Good one.
All right. Love that one. That's another stock that I personally own and I've been adding to while it's been down. I think that it's going to be a good long-term play. And
100%.
I mean, how can you say no to that like 9, 10, 11% dividend, depending on where the stock fluctuates, during the week. That's just a huge yield.
Yeah, that's great.
Yeah, I love it. Love it. So that brings us to number 7 and back to Jason.
Yeah, sticking with defense here. So there's a very specific reason I'm bringing this company up here. If we can get to Raytheon. And this is the last time I'm going to be referring to it as Raytheon.
What?
Because this is its ticker symbol and its new name. Raytheon is rebranding as RTX. This is probably overdue in a sense, because what happened is back in 2020, Raytheon acquired United Technologies, and they owned Pratt and Whitney. So they acquired these commercial aircraft engine manufacturers, and Pratt and Whitney and Collins Aerospace. They do a lot of commercial aircraft work. And so much, in fact, that now accounts for about 60% of Raytheon's total business as opposed to defense. It's about $40 billion in the commercial aerospace sector for Raytheon as opposed to $30 billion in defense. Even though Raytheon is, as a household name, mostly known for its missiles in particular. It makes if you've heard of a missile by name, Tomahawk, Patriot, Stinger, they're likely made by Raytheon. However, now to distinguish between the company itself and its basic military brand, it's shifting to this RTX label. But the big thing too, Raytheon RTX, no matter what you want to call it, it's paid a dividend since 1936. It's raised that payout every year since 1994. The company's current dividend payout ratio is 57%. So for every $100 it generates, it pays $57 in dividends. It's got a backlog of orders totaling about $200 billion, expected to increase its earnings per share by 64% over the next 4 years. And what that could potentially lead to is a doubling of its dividend payout over the next 5 years. So you're looking at a company that's been paying dividends for a long time, that's been increasing dividends for a long time, that is obviously in really good position, because we've seen a strong rebound in commercial aerospace since the end of the pandemic, which obviously put a damper on things. The supply chain issues held up a lot of things in terms of getting metal castings and a lot of parts or whatever. A lot of that's cleared up. Things are, ready to go for Raytheon. They're also going to have to start backfilling the supply of missiles that have been sent to Ukraine and been used to repel the Russian invasion there. So they're going to be doing a lot of business for the foreseeable future, and you're going to see that translate into dividends and income. So that's why Raytheon RTX now makes it here for me.
That's a great stock. I love it. And that dividend payout ratio is nice. That's a really good one. I like to say that anything below 60 for a regular company, below 80 for a real estate investment trust is a very secure dividend.
Right.
Not only is it not going away or not getting cut anytime soon, but there's also ample room to grow it, which you just pointed out.
Right. Yeah, and it's still, it's a good dividend. I don't have the yield right on me, but it's probably about 3% if I were going to guess at it. So it's probably got a moderate yield right now, and it's one of those things you buy in, and that yield will naturally increase over time as they raise that dividend, and your buy-in price stays stagnant.
Yep. That's what we talked about with IIPR, with that yield on cost. I love that yield on cost. Those original shares just gain so much more, and that's the same thing with Raytheon when you're buying over the long term and holding for a while.
Yeah, and I'll also say, because there was, with the debt ceiling debate, a matter of the capping defense spending, but that's really only going to be them holding defense spending down to about 1% growth over the next year, as opposed to about 3%, which it was before. And they'll probably find ways around that. I think the Senate was pretty angry, actually, that got included in the debt ceiling deal. And so defense spending, it's not going to go anywhere. These wars, these conflicts we're seeing, whether it's Russia, which almost, by the way, devolved into a civil war over the weekend, or China, which we all know is going to invade Taiwan, U.S. domestic security, like I said, backfilling the supplies we've sent over. There's a lot of work there's a lot of work out there for Raytheon and other defense companies.
Oh, definitely, definitely true, definitely true. And you mentioned missiles you've heard of by name. They do the Javelin too, right?
They co-make that
Co-make
with
that
Lockheed
with
Martin.
Lockheed Martin. Okay, we heard a lot about that at the beginning of the Ukraine conflict.
Yeah, that's an
the
anti-tank
Saint
one, much like the
Javelin.
Stinger that they make. Both of them are kind of heat singing. They'll lock onto a profile of like an airplane, and so if anything's kind of flying overhead within range, they will take it down. The Javelin actually deploys in 2 phases, where the first phase actually melts the body armor of a tank, and then it goes in, and then the second munition explodes and detonates inside, but it pierces that outside of the tank armor first and then blows it up. It took a lot of Russian tanks down early in the Ukraine
Yeah,
invasion.
yeah, that was my understanding. That was definitely like part of the reason that the conflict's been,
It
as
had a
long as it
nickname.
has
They were
been.
calling it Saint Javelin.
Saint
Saint
Javelin.
Javelin of Ukraine.
The protector of Ukraine. Interesting, very interesting. I like it. I like it. I think that's a good one, and that concludes our first 4. So we're going to do a recap for the folks watching on YouTube, and then we're going to cut that off, and we're going to get into the what I like to call creme de la creme. I mean, these are all great stocks. We love them all. They're all in our model portfolio. So long term, we're all bullish on all of them, or we're both bullish on all of them, I should say. All 2 of us. But we're bullish on all of them. These are our first 4. We've got 6 more coming. So we're going to do the recap, and then we're going to cut that off on YouTube. YouTube subscribers, if you want to join us for to become official members, I highly recommend it. Click the link below the video. You'll get a discounted subscription. If not, if you decide not to do that, then like I said, that's fine. We won't hold it against you. All we ask is you subscribe to the channel, give us a thumbs up on the video if you liked it. And if you've got any questions, comments, opposing points of view, feel free to drop them in the comments, and we'll either address them in a future video or directly type back to you, ourselves. We do that sometimes. So anyway, let's get into the recap. You want to clear out the ticker there? And that way we can see the recap, and here we go. So my first pick, our number 10 stock this month, is Chewy. We like them for the short term because of the momentum that's behind them, because of their performance from last month. We like to let winners run. We like them for the long term because they're really banking on 2 long-term trends: 1, pet ownership, and 2, online retail. So I think that one can do well. It can continue its momentum through July, and in the long term, I really, really like it. I think it's underpriced, and I highly recommend picking up shares. Next up, Jason's pick.
Yeah, Leidos. Like I said, 2 major military projects over the past month or so. The hypersonic test bed, which I think is a good long-term catalyst for development, and then the advanced sensors for the Marine Corps, which are going to be, they're smaller in scale, but going to be deployed all over the world, literally dozens of them. So Leidos, a good play. Like I said, it doesn't have the same name recognition as those companies like Raytheon RTX or Lockheed Martin, Northrop Grumman, some of the bigger companies. It does kind of slip through sometimes. So I like that at number 9.
Love it. Great stock. Coming in at number 8. My favorite pot stock, I think everybody's favorite pot stock that's been a subscriber for the Wealth Advisory, Innovative Industrial Properties. They have nothing to do with the pot. They just own the real estate, and they rent it out. They share the income with us in the form of a steadily growing dividend that's super duper high right now. They've got some momentum behind them. They're trading above their short-term moving averages. They outperformed the market last month, and I think they can do it again in July. So we're giving them a shot at number 8. And that brings us to the last one in our first 4.
Yeah, Raytheon, or now RTX. Like I said, the name change is warranted. Their commercial aviation business now probably exceeds their military business by about $10 billion. Great dividend payer, great history dividends going back all the way to 1936. If you're looking for a bit of income to play the rising defense budgets that we're seeing around the world, and the kind of trend that we're seeing ever since Russia invaded Ukraine, then Raytheon's a really good way to do it.
All right, and that's our first 4. I think they're a great list, and that's where we're going to cut it off for those of you watching on YouTube. But like I keep saying, if you decide you want to join us, there's a link below the video in the description with a discounted offer. Check it out. I mean, honestly, it's I used to say it costs about as much as a dinner out, but now it costs about as much as like just the drinks that go along
Dinner out
with
by
dinner.
yourself.
Yeah, dinner out by yourself. I mean, seriously, you couldn't even go to the ballpark and like have a couple of hot dogs for what we're charging. Like you in a couple of months, you might not even be able to get a burrito at Chipotle for what we're charging for a year's access to this. So definitely check it out. If you decide not to, though, just subscribe to the channel. Give us a thumbs up if you like the video. Drop some comments if you want to see different coverage, or if you've got questions, or if you think we're just both like completely off our nuts. Just be nice about it, please. We've got fragile egos. I'm just kidding. I mean, I'm not kidding. Please do be nice about it, but we're not that fragile. If you are a little bit mean, we'll deal with it. But yeah, we'll keep coming back and we'll keep giving you these videos for free as long as you want to watch them. But if you'd like to get, our actual top stocks, then you're going to have to subscribe to the Wealth Advisory, become a member, and you get a whole lot more with that. We do monthly issues, new recommendations each month. We're constantly uncovering new income streams that are growing, that are going to pay you for as long as you want to receive the income. So check it out. There's a lot of value there, more than just the top 10. But honestly, the top 10 is probably worth every penny that we charge. So, as usual, thank you for watching, and we'll see you next month.